when we said the turning point in the forex market, turning point simply means any level in which one market hit the level it reversed. That's turning point. So we call them support and resistance. So the one towards the downside is called resistance. Then the one towards the upside is called resistance. Then the one towards the right side is called support level. So this piece, if we have something of this nature, then likewise something of this nature here. So this one here is called the resistance level, while this is called the support level. So what we do in the market is we buy at the support and we sell at the resistance. If we sell from this point to the support level, then we make profit. If we buy from the support and sell at the resistance, then we make profit. Just like it is in our daily activities trading. When you have some good, let's say rice, when rice is at its lowest price, that's on its support level, then you buy and hold, isn't it? When you buy and hold it for a while, it might increase in price. When it increases in price, you might get more profit. Then that means you are selling at the resistance level. You understand? Then if that rise all of a sudden, if the rise drop down, let's say you bought at somewhere around this point here, then all of a sudden, let me use this. Let's say you bought here, then all of a sudden it dropped. Let's say you bought at 150, then all of a sudden it dropped down to 100. Then we'll call this stop loss, because you end up being in a loss. Unlike, let's say you buy at 150, then it keep flying, 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 and flying, and then increasing. You understand? So at this level, you make a lot of profit, while at this point you lose. So that's why we say the forex market is a market of probability and possibilities. The possibility of we buying this is because we all know that the support level is a turning point, expecting a bullish move. Then the possibility of it dropping, you understand, it might be maybe fundamental effect. So any level when the market hit, it flies, it calls support level. And any level when the market hit, it drops, it calls resistance level. So this resistance level and support level, you understand, are very important in the forex market. They play a vital role. If you can't identify support and resistance in the forex market, then you will just end up wasting your time, because the support and resistance are what drives the market in general. You understand? They are what drives the market in general. So you have to pay much more attention on your support and resistance, understand them very well. You understand? So we also have some types of analysis in the forex market. We have the technical analysis. The technical analysis, let me mention them. We have the technical analysis. We have the fundamental. We have the sentimental. So these are the three types of analysis we have in the forex market. We have the technical analysis. This technical analysis refers to us using the previous market condition, or the previous market direction, or the previous market characters or features to analyze or to forecast what might happen in the future. Then for these fundamentals, this is news event trading. Fundamentals refers to trading of event news and all of that. Let's say in America, there will be a crash. You understand? There will be a crash, let's say in one of the biggest bank in the country. So what do you expect will happen to the financial market of that country at that same day? It will drop down. So this is fundamental effect. So when fundamental affect the market, you might expect a buy from this level to this level. But when the fundamental have issue there, let's say they have a loss in one of the biggest banks in the country, it might end up dropping. hitting stop loss. You bought at 150, instead of you to make profit, you might end up losing 100 or 50. That's for fundamental analysis. And also, if banks are in holiday, let's say we have a bank that, let's say in America, we have a holiday, and that same day, you find out that the market will be moving very slow. You understand? But if all of a sudden you are looking for a buy at this level, if all of a sudden you bought at 150, then there is a fundamental effect. You might end up hitting this your target in few minutes. Pew, the market will just move pew in few minutes because of what? The effect of those fundamentals. So once your technical analysis is correct, like 90% correct, then most of times, 95% of times, the fundamentals move together with the technical analysis. If you analyze a buy, just wait for the news to be released. Then once the news is released, you find out that you hit take profit so sharp because of the fundamentals. But if all of a sudden it move opposite direction, you end up losing as well so sharp. So that's the effect of fundamental. Then for the sentimental analysis, we have what we call human sentiment. This human sentiment is very important because that's what will tell you even buy at this level. Your sentiment will tell you buy at this level, or you have seen this candle formation, then buy and put your stop loss here. So if your sentiment is not good, psychology, emotion, if it's very bad, you understand, you might end up losing as well, because you might end up buying at this level, then your SL might be very tight at this point. Then all of a sudden the market can give you from this level, then it might end up hitting the SL and then flies as well. It happens most of the time with the fundamental. So what if your stop loss is somewhere, if your stop loss was somewhere around this level, you see, you might not end up hitting the SL, the market will fly to your direction. So this is very important. The whole three types of analysis move together with each other. One cannot work without each other. One cannot work without another. Technical cannot work without fundamental. Fundamental cannot work without sentimental. So you have to be good in all of them. But the main thing, be good in technical analysis. When you are good in analyzing the market, then you find everything so simple and so easier. So support and resistance plays a vital role in the forex market. Likewise, if market hit the resistance, it dropped. If it hit the resistance, it dropped. If it hit the support, it flies. A resistance, it drops. Support, it flies. A resistance, it drops. Support, it flies. This is how the market moves. You understand? So finishing with this, then we go about the chart pattern. We said when the market hit the support level, let me mark it out. Let's say this is a resistance level, and also this is a support level. So excuse me, just give me a few minutes, please. So
Recording in progress.
So the chart patterns plays a vital role in the forex market. When the market is hitting the resistance or the support level, when the market hit the resistance, when market hit the support, we know it flies. When it hit the resistance, it drop. Support, it fly. Resistance, it drop. But the market don't move on a straight line like this. We have what we call the chart pattern. In this chart pattern, we have what we call the double top. the double top, the double bottom. We have the head and shoulder. We have the inverse head and shoulder. So at this level, we have the double top. Once you hear the top, then just know that it's happening on the resistance level, the bottom. It's happening on a support level. Head and shoulder happens on a resistance. Inverse head and shoulder happens on a support level. So when this chart patterns happens at this level, if this is the resistance, if the market is about to drop, then you might have this, the double top. This is the double top, just M formation before the drop. Then the double bottom is just this, W formation on the support level, then before it flies. The market don't move on a straight line. You get the point. The market don't move on a straight line. The market don't move on a straight line. It starts to give you a chart pattern. You understand? The market don't move on a straight line. It has to give you a chart pattern. Then this chart pattern, the double top happen on a resistance, the double bottom happen on a support. Then the head and shoulder pattern, it happens on a resistance as well. When we said the head and shoulder, just like you, the normal human being, this should be your left hand, your head, neck and head, then your right hand. So anything regarding to the right hand is dropping that side. Likewise for the support. When we said the support, we mean this the inverted head and shoulder on the support level before the flies. This is your left shoulder, your head and neck, then the right shoulder is just the transpose of this. So this double top and double bottom, head and shoulder, inverse head and shoulder, we have 3 types of each. We all know that percentage is 100. So if percentage is 100, then, and we said we have 3, that means we should have 3 different chart patterns. For the for the double top, we have this, and this, then this. This is as well an M pattern. The market will not give you a clear chart pattern that you'll be able to see it clearly. You understand? This is another one as well. So at this level, these are the 3 types of chart patterns we have. This is a M pattern, but at this level, this so-called leg here has closed above the previous leg. That means it has closed above this level here. It has closed above this level. This was the previous high. Instead of the market to respect the level and drop, then it broke out. You understand? Just like, let's say it was formed at this level. Let's say it was about to form, and then all of a sudden we have this, then this, then it break out like this before it follows the direction. So it might go and hit some people's stop losses before it dropped down. You get the point. So that's why this has 20% probability playing. 20. Just write that down. This has 20% probability playing. Then we have this M pattern here, the one with equal highs, telling you that what market has falls to break above the previous high. That means we were able to get an EQH that's equal high. That means the resistance level is very strong. That sellers are ready to move the market. After the first leg, second leg, then the market dropped. This has 30% probability playing. It has 30% probability playing. Then we have this one here that has the second leg that was not able to reach the first leg. This has 50% probability playing. It has 50% probability playing. Who is this one drawing on my board, please? Please, let's pay attention, please. Let's concentrate. Please. So let's pay attention, please. We are all doing this to learn, understand. So let's pay attention, please. So we also have this, we're explaining this. We said it has 50% probability play. The reason is because the previous leg was not able to reach the first leg. That's why it has 50% probability play. Telling us that what the sellers are even much more ready to sell the market because they have failed to break above the previous or even reach the high. So most of the times we used to catch off this type of movement with Fibonacci. We have what we call Fibonacci. It's a tool used to catch a retracement. We respect the premium level of 61.8 most of times, 80% of times. Market respect the premium level of 61.8 Fibonacci level. So likewise, for the double bottom, the reverse is the case. This one will turn upside down, this one as well upside down, this one as well upside down. So when you know this, then you should know about the double bottom as well. Then we have the head and shoulder pattern. So for the head and shoulder, let's talk about the inverse, then you transpose it to the normal head and shoulder. If we said we have this as the left shoulder, sorry, this as the left shoulder, the neckline, then the head, then the neckline as get respected, then the head, then this. So at this level, you can see we have what we have this head and shoulder pattern, the one with equal neckline. At this level, this neckline and this shoulder are of the same type. You can see the same length, the same size. So this has it has 30% probability play in the market, and it has to form on a support level. Then we have this, and then this, then the one with this, then before the market flies. So at this level, you can see it it broke above the previous neckline, the previous, this was the first shoulder, and this was the second shoulder. So at this level, you can see it broke. It did not align with the previous neckline. It has taken it out. So some people might not even consider it as head and shoulder, but for us, once we see it, we'll be able to identify it. You understand? So if that's the case, if this has 30% probability plane, then this has 20% probability plane. Then the one with 50% probability plane should be the one of this nature. This, then before the price. You can see at this level here, this shoulder dropped down a bit while this one was the upside. You understand? It was up a bit. So that's why it has 50% probability plane. So when we come to the, what's it called, to the head and shoulder as well, the reverse is the case with the inverse head and shoulder. If the inverse head and shoulder will be formed on a support level, then the head and shoulder should be formed on a resistance level, isn't it? So that's how we keep reversing and reversing it. So you can take note of this. This has 30% probability plane because of the equal neckline, while this one, because it has took out the previous neck, the previous shoulder, it has 30% probability plane. Then while this one has 50% probability plane because the left shoulder, the last shoulder was higher than the previous shoulder. You understand? So
What's that?
yeah,
Which one has 100 probability?
which has what?
100 probability.
No, we said, you know, percentage is 100. When we said
Yeah.
percentage, even in mathematics, physics, chemistry, anywhere, it's 100. So 100 divided by 3, that's what give us this. This has 30, this has 20, that's 30 plus 20. that's 50. Then this one alone has 50. You understand? So this one plays a vital role in the market. You get the
Oh,
point?
I understand. I get it.
Yes. So it has 50. 50. Then this one has 20. That's 70. This one has 30. That's 100. You get the point? So you can see
I
with
get
this
it.
chart pattern, only can be able to make money in the market. When you understand this chart pattern, you know when to risk a lot and when to risk small. When you have a chart pattern with 20% probability playing of this type, then you risk small. When you have this with 50% probability play, then you risk more than what you risked on the one with 20% probability play. That's how to be profitable in the forex market. We reach based on the setup. So the support and resistance also plays a vital role in the forex market. So let's check something of this nature, even though we are not up to that, boss. Let's
1 minute. 1 minute, sir. Please, how many types of chart pattern we have in the market?
you say?
How many types of chart pattern we have in the market?
Yes, basically we have two. You understand? That's the double top, double bottom, head and shoulder, inverse head and shoulder. These are the most common ones, you understand, in the market. Then we have some patterns. Patterns is different from chart pattern.
Yeah,
When we said pattern, we mean,
patterns, I mean.
yes, pattern, we have continuation and reversal.
Yeah.
When we said continuation pattern, we have the flag, the triangles. You understand? Bullish flag, bearish flag, triangles. You say?
I'm following, I'm hearing.
So these are the common continuation pattern we have. Then for the reversal, we have a wedge. A wedge do form on a resistance level or a support level. We have the rising wedge and we have the falling wedge. So let's check. This is Euro AUD. Let's analyze Euro AUD and see so that you guys can see how. So who can tell, based on what we tweeted, who can tell me how many percent probability playing does this chart pattern have? This one here. We just spoke about chart pattern. This one, this M formation, how many percent probability plane does it has?
50.
You said?
I said 50.
Yes, nice one. It has 50% probability play. Reason is because it has forced to reach the equal highs. It has forced to reach where this price got rejected from. You understand? Or even break above the high. So because of that, it has 50% probability play. And you can see after that market dropped massively. This is about how many pips? Let me see. This is a lot of millions. This is about 330 pips. This is about 330 pips, which is very, very enough. Then analyzing this pair, first of all, when I'm analyzing the pair, I can analyze this pair, understand, just from this level. But I want to show you guys the top-down analysis starting from the daily time frame and see what the market is doing there. So this is Euro AUD on the daily time frame. So if on the daily time frame, if this hold, you understand, if this hold, how many percent probability playing does this M pattern have? Hello?
Still 50.
Yeah.
50.
Yes, nice one. So this also has 50% probability playing, but we can't say it will hold because yet now this candle has not closed and this is daily. So let's just start the analysis from the H4 time frame. So starting this analysis from the H4 is very simple. You understand? It's a very simple something. This market has been flying to the upside. So first of all, how I analyze, I will mark out my high, then mark out my low. Then use the trend line, draw from the high to where the market is presently. Then click on this, clone. Oh, we have less than 10 minutes left. take it to the downside like this as well, then tilt a bit. So switch to H1 time frame. This is how to do the top-down analysis. You keep switching to smaller time frames for more clearer view. So what I'm expecting now on this pair is to reach this level, to drop down to this level before I keep buying. You understand? So this is so simple to analyze. This is how to just analyze. That's all, man. But the entry is the problem. But you guys have not reached here yet. I'm still taking you guys gradually. So let's not be in rush, but this is what will happen with this pair. So before this happen, you know, the market is presently on a resistance level, isn't it? We said resistance level that has, this gave us a reversal chart pattern. As I said, the reversal chart pattern cannot just be, the market cannot just drop pew like that. No, it has to give us some chart formation. Which what do we call this chart pattern? What do we call this? The name of this chart pattern?
Double top.
Yes.
M formation.
Yes, nice one. Either the M formation or the double top is still the same thing. So, and this have how many percent probability playing?
This has 30%.
25.
No, it has
No.
30% probability playing. The reason, because the market falls to break above the previous high. It gave us an equal high EQH at this level, got rejected and started dropping. So what we should just do at this level is to just look out for a small correction phase, something of this nature, a small correction phase. You understand? A small correction phase. Then we keep selling. While selling, oh, who is this place? You should wait. If you want to use the board, I will give you chance to do that. If we sell to this level, from that point, we look out for a correction phase, then we sell to the downside. After the sales, then we take the buy. We only do two things in the market. It's either we sell or we buy. One must happen. It's either the market is buying or selling. You understand? That's what we trade. So the correction phase is about to happen as well. It's kind of correcting. It won't. It's not a must that it has to be expanded like the way I did mine, but we should just look out for a correction phase.
GU.
Just normal correction phase. It's even happening now, like this. London session, we sell this market. London session, you understand? We sell
That's tomorrow.
You say?
That's tomorrow, man, right?
Yes. Tomorrow, London session, we sell this pair.
GU.
GBP USD. Yeah, one of my students have sent GU. We should be looking out for buys. You understand? Because I trust the setup that the guy sent. It's looking so sexy. GBP USD. We have small time left, but let's do it, man. What's that? GBP USD should be looking out for buy starting from the daily time frame. So if that's the case, GBP USD, this is the daily time frame. Then I switch to the H4 so that I can see what is happening. Very close. Man, GU card. But it's well, GU will mark out our high, marking out the high, then marking out the low. Understand? Then using the trend line, if it's not workable here, we switch to the smaller time frame. I think it's gonna be okay. So we switch to H1 time frame. So this is GBP USD on the H1 time frame. It's looking very interesting. We target this high, but the market keep respecting some patterns. Don't know if you guys can see it. This was a pattern for the buy to the upside at this level. Then this was another pattern that the market was formed at this level for it to keep flying. This,
What,
so the entry should always come from the third touch. That's at this level. And you can say it was
what of
a
if,
break of
what of
stock.
if G, what
You
if
said?
G want to do something like this? Please permit me. What of if G want to
My
do something
penis
like
hurt.
this?
What of if G? What of
You are
if?
moving the screen, please. Then you drop again before you go.
Yeah, it's very possible for it to do that. You understand? It's very possible
Yeah.
for it to do that. You understand? But for now, what I'm seeing, I'm trying to respect the previous pattern that the market been creating severally. You understand? I can also support another one from this point here. You understand? This was how the market keep creating this pattern. So if all of a sudden GU decided to react from what you said, drop down a bit, then before it move, it's still fine. You understand? Because even for now, I can't tell you to just buy GU. No. For me to tell you to buy,
Yes,
I would
yes.
still like to see a small correction phase here. Then before I can tell you to buy. But for now, I can't tell you to buy GU. You understand? Because it can do what you said, it can drop down. It can still drop down this level. You understand? So we take the buy. So out of these two scenarios, one must happen. It's either the correction after the breakout, or it dropped down to this level for the third touch before it kept pushing to the upside. But all I know is that GU is looking a very good buy opportunity from this point, probably. You understand? So it's very simple. Okay, yeah, GU buy, right? Yeah, it's cool, man. It's cool. Then
Someone draw a sell on GU. Someone posted sell on GU in the group self.
okay, a sell on GU. So I don't know how he was able to come out with that. Someone said he lost 10,000, at least 10K on GU. I don't think it's a, maybe you have entered early, you understand, or you have entered the wrong time. We trade session, either London or New York. That's when we trade, and we trade based on confirmation. No confirmation, no trade.
Yeah.
Don't be on a rush. The market will always come to you. Don't be on a rush. That's it. But for now, I keep trying to respect this pattern. Market keep respecting this 1, 2, 3. Then if all of a sudden it's going to drop, then that means an expanded channel is about to form. But for me, I don't think GU might still drop because of this correction phase here was valid. Our level was tested, and we already had touch. So I'm looking for a small correction phase and keep buying to the upside. I'm kind of
Okay.
That's why I did not trade this week. I have lost a lot of opportunities. So this is how we trade. Very simple. You can see in just 1 minute you can analyze 2-3 pairs. That's all. When you know it, you know it. That's all. You understand. The forex is not a quick rich scheme, but it's a rich scheme. You will be very wealthy, very rich, but not that quick. You understand? That's what is deceiving a lot of people. Always use good risk management. Don't be influenced by what some people are doing on the social media. A lot of them are fake. Just try and be you. Be real to yourself. You understand? That's how to grow. Even if you are using 0.001 as micro, yeah, good placement. Thank you, man. 0.001, it's better for you than to go and reach. All right. I will share the video, but it's only my student that will get access to that because it will be shared on the class group.
Penis.
You said,
I have a question, please.
all right, carry on.
Regarding this resistance and support,
Yes,
when
ma'am.
you started, actually, I wasn't present, so I was a little bit confused about it. Can you please explain more?
Okay, resistance is any level. When market hit, it drops. Like this level here, we can call it a resistance level. Like this level. First time market hit this point, it dropped. Second time, it dropped. That's why we call it a